Hi guys, we're joined by Fred Razak, CMTrading Senior Specialist. How are you doing today, Fred?
Good. How are you, Sir Jim?
Excellent. Fred, I wanted you to talk about the equity markets. We've seen an incredible boom just this year. What's causing this?
That's a great question, Sergio, because everybody is just scratching their heads. And really, I mean, those of the fund managers that are really in the game really know exactly what's going on. And basically, it's just very simple. The central banks are enforcing to a certain degree that people should not keep their money in some sort of savings or some sort of
Oh,
bonds or treasuries because their return on it is just so low right now. It's not worthwhile. So what people are doing is that they're taking the money and they're investing it in real estate. They're also investing it in the stock market because they're now forced to because the money that's sitting in the bank is not earning them any interest. So this rotation in the market has led the financial sector to really, I mean, specifically the stocks. If you look over the past year, what's happened is really unprecedented. That we should be at all-time highs
indeed.
with Amazon or Microsoft or Apple, where we're in a pandemic, we're in a recessionary environment, but yet these stocks are going up. So it took a while for everybody to really catch on to what the Fed is doing. And there's a little bit of a rotation here as well, as the government is going to be getting into its own lockdown unless they come up with some sort of between the Democrats and the Republicans, and then unless they come up to some sort of agreement about how they're going to spend money moving forward, because they're going to run dry, okay, in October. So it's going to be kind of interesting how this all pans out moving forward.
It's such a break from sort of traditional investing because one would assume that investing with a bank, over the long term is, safer. Is the actual return on investment, does it offset that risk?
Well, generally it does. Okay, generally speaking, if you're investing in the financial markets over time, if you bought, let's say, at the height of the pandemic last year on March 18th-ish time, and you held it until today, you would have been a financial millionaire. Okay, but that's not even question. Nobody anticipated the markets will rebound so aggressively and will continue making new highs because nobody really understood what the Fed was going to do. But now that the Fed is doing what it's doing, it seems like there's free money and no tomorrow. The stimulus packages that they're giving to individuals, the stimulus packages that they're giving to small businesses, to airlines, all these type of printing of the money is developing and setting up a potential colossal debacle. Okay, in my humble opinion, and it's only because the Fed is really coming in there and taking control of the money markets, and it's being replicated by the rest of the world.
I was about to ask you in terms of red flags. So, how can traders take advantage of this?
Well, I mean, you could definitely take, from the stocks and focus on the stocks and not focus on Forex symbols because
Oh,
it's stocks right now that are trading so well. Microsoft, Apple, Amazon, all making new highs. Facebook also, it's a FANG stock plus Microsoft, right? And those things are not receding. Those things are continually going up. So, you can't fight the trend. The trend is your friend. And if you continuously play this game on the upside, every time it's retracing and continues playing on the upside, at a certain point you kind of get it. And from October, okay, from right before the US elections it's in now, we've gone up over, something like 30%. So again, you've got to just read the charts, read the tape, and just, replicate on a daily basis. And that's how you can participate in the trading markets.
thanks so much, Fred. I'm sure your advice will help all our traders out there.
Thank you.